What's up, market snipers? Welcome back. This is Jesse getting out a video here at 5:30 p.m. Pacific Standard Time on this glorious Friday evening before the weekend. I just want to get this out. We had a big day today just because it's the first Bitcoin sell signal since October 11th. You can see over here a sell signal today, January 12th, and then back here on October 11th was the last sell signal. A few days of consolidation, there was a buy signal, and then price took off to the upside. So it's a big day, right? It's a big day. Yesterday was a huge day. Price went all the way up and hit longer term target 4. I'll show you all the targets. I'll remind you where the longer term target 4 was that we drew at the bottom of the bear market when we were taking longs at 16,800. We drew out that fourth and longer term target. It was hit and price reached all the way up to about $49,000, right? And then started to reverse back down. We were calling it out in the lower time frames. I was joking about the 5-minute time frame, but the 5-minute time frame had a reversal candle. It was a joke, but in hindsight, that kind of kicked things off. Then it turned into the 15-minute chart, then it turned into the 1-hour chart, and then this bearish candle. If you take off the sharpshooter indicators, you can see that is a definite bearish candle. Huge wick plus close below it, right? So highest candle close just under $47,000 over there. Call it $47,000. And then we didn't have another candle close higher. That is January 8th, still is the highest candle close of 2024, of 2023, of 2022, I believe. No, it wasn't. Going back to 2022, but 2023, 2024 is the highest daily candle close. It was back here on January 8th. Wake up, wake up. It was getting very wicky, bearish candle, right? And now it just took out this candle here. So we had a sell signal today. But this isn't the first that we've been talking about it, right? We're not telling you in hindsight. So if you're brand new, this is not in hindsight. We've been talking about it. We've been covering it. The quick recap is if you're new, we're talking about it was oversold. There was bullish divergence followed by a reverse candle, a higher low, and then price takes off to the upside after that last buy signal. Then we were talking about it was overbought, bearish divergence, reverse candle, not confirmed, no sell signals, no confirmed lower highs, right? And then it started to break out to the upside. We were calling it. It was breaking above, call it 37,850-ish, right? And then started to get up here, and it was getting overbought. Additional bearish divergence, still being diverged. The thing about that is price and RSI can remain diverged for much longer than what people think. And eventually price will catch up, whether it's bullish divergence or bearish divergence. So recap again, looking like a lower high, not confirmed. Multiple sell signals, multiple pending sell signals, I should say, throughout this topping pattern, but none of them turned into be a sell signal. They are all these wicks, right? All these wicks. Well, I don't know about these ones, I can't remember, but all these wicks, we were talking about watch out for the pending sell. Watch out for the pending sell. Watch out. Could be a lower high. Could be a lower high. Could be a pending sell. And then in the 11th hour, or I should say the 23rd of the 24th hour, many times the candle was pushed back up to where it was not a sell signal any longer. Pumped back up. Additional bearish divergence. Another reverse candle. Starting to show signs of a topping pattern. And then pushes up one last time. Bearish divergence. We're going to show it right now. You can see the indicator was picking it up all the way from back here on October 25th all the way to December 5th. And then it's not picking it up to January 2nd and then also January 8th, right? So you can call that bearish divergence all the way. And then this is looking like a sneaky lower high back here on this candle. And then one last pump up right before the ETF. The ETFs get approved, pumps it all the way up, and then dumps on everyone, right? Rinse, repeat. We talked about that. We covered it on the live streams. We covered it on the videos that watch out on the last video that we did, the last update we send out to the free newsletter. So definitely go take a look at the free newsletter. I'm doing longer write-ups over there with all the details, a lot of details, putting a lot of work into it along with these videos. So definitely go subscribe over there for free. Help me, help you, help me. Share it with your friends and family. Share it with on your social media. I would appreciate that. Help me. I appreciate that a lot. And I appreciate all of your support. So getting back to it, bearish divergence. And now we have a sell signal for the first time since this sell signal. This sell signal is different, right? This one wasn't following bearish divergence. This one is. This one wasn't following a huge, massive pump. This one was, right? So there's a lot of differences. Also, I want to switch over to the weekly chart before we get into the targets and start getting in what we think is going to possibly play out in the next weeks, months ahead prior to the next halving, right? We're going to get into all of it. Stay tuned, stay in, stay engaged, smash that like, smash the subscribe button. Let's go. So we had a weekly candle close here at 43,785, and then a slightly higher one here on 2 weeks ago, right? 2 weeks ago, no, last week. Oh my god. Well, this candle is almost done, right? So last week it closed slightly higher. Why I want to point that out is that is bearish divergence, right? That is slight bearish divergence. And this candle looks very similar to the daily candle. If you take this off, looks almost identical. Huge, massive wick up. And if it closes down, hasn't closed yet, but it's trending that way. We still only have Saturday and Sunday, and then that candle closes, and it's going to look almost identical to the daily chart, right? Almost identical to that daily chart. It would be a bearish candle. There would be slight bearish divergence after it was overbought since October. The weekly chart's been overbought since October. You get the trending dots and the moving averages trying to catch up. Then you flip over the monthly chart. It's still bullish on the monthly chart. Huge wick though. The month isn't over. Still have a lot of time left before the month, but it could be flat, could get a correction. You could see it. The trending dots are way back here at 29,000. So they're very extended away. So even if it's a longer term bull market, even if it's a longer term bullish with monthly chart, it doesn't mean it's not going to correct 20, 30, possibly 40% or even more, who knows, and let those trending dots catch up. Even from that wick down to like the trending dots and the 200-week moving average, 38%. So it is possible, right? So let's get back to the daily chart and let's dive into what the scenarios that we've been talking about, what we've been covering. We've been talking about it for a long time that we were looking for a possible buy the dip scenario, meaning AKA lower prices prior to the halving. So let's turn it all on right now. Let's do it. Let's do it. Here's the projected halving. It's different on different websites, but the website that I've been checking has said April 13th, has said April 18th, and the last time I checked it was April 17th. So I just have it here right around April 15th because that is a weekly. Is based off the weekly chart when I put that on there. So we've been talking about in past cycles, doesn't mean it's going to happen again. In past cycles, we've seen pumps up to the upside, followed by a buy the dip scenario where price retraces, hits 3 or 4 targets to the downside, finds support, and then takes off before the halving. And that is your last buy the dip scenario, whether that is in February, end of February, middle February, March, April, whatever it is, whatever it works out to be. This is kind of the game plan laid out. So we even back here going to like December 7th, December 5th, I think, somewhere around right around these candles over here, I started drawing out this scenario. I drew out 2 scenarios. This scenario would pump up, hit this target one last time. Well, didn't even hit a target before. It would pump back up, hit this target, and then possibly drop down and start hitting. So I redrew it based off of what the sell signal candle has done today, right? So it was a fake out, pumped all the way up, hit that target, and now it's right back into this area. Could drop down, hit this target first, pump back up, possibly put in a lower high, and then take off to the downside. If it's going to follow a similar pattern to MicroStrategy, right? This is what it happened on MicroStrategy. This is very similar candle, right? Very similar candle. If you take that off, big wick down and a closed bearish, right? Followed by a gap down the next day. Well, guess what? That next day was the big sell signal today because there's no gap down on Bitcoin. Then a possible little pump up creates a lower high and then broke straight back down and hit 3 out of the 4 targets to the downside. It's getting pretty far extended away from the trending dots on the daily chart. It's possible MicroStrategy finds temporary support, bounces back up, then comes back down, hits target 4. It is possible, or it remains bearish, just comes straight down to this target. If MicroStrategy could be leading the way, could be the leading indicator. So that's why we're covering it. And if you look at it, if it doesn't find support this target box, I'm expecting to find support here, maybe even here, right? It's possible to find support where it's at right now. But if it doesn't find support at key target 4, then I would be expecting price to come back down to the 200-week moving average, fill this gap down here at 384. Maybe it doesn't even quite hit the 200-week moving average. Maybe it's very close and fills that gap down there. We could probably add that right now while we are recording this video. So we'll put that on as a gap. It's not a huge gap, but this wasn't a huge gap and it just got filled. And if we look at it from here, that it gapped up almost 5%. So it is something to pay attention to. You do have this gap down here. And so we're going to keep an eye on it over there. So that's Bitcoin. If you look at it, this is a key target area. There's actually another target up here that was already hit, but I didn't even put it on just because it'd be so messy on the charts looking at it. Here we are almost 12 minutes in on the video. We're going to try to wrap this up, keep it within 10 to 15 minutes like we did in the last one. So this is what I'm expecting, sub $40,000 Bitcoin, possibly sub $37,000 Bitcoin, right? Possibly sub $35,000 Bitcoin. And then we'll find out if it finds support at one of these 3 key target areas. If not, I have a lower probability target down here. Also lines up with the 200-week moving average and comes in a little bit higher, similar to the MicroStrategy MicroStrategy gap. Oh my God, we just charted it, right? One last thing I want to show you of a potential, right? Silver. I put this out on the Twitter X app. After a lower high, silver did come down to the 200-week moving average as well, did a round trip, right? Went through this consolidation period from December 4th all the way down to January 11th. So it was a 1-month consolidation. We had a reversal candle today. It went below the 200-week moving average for multiple days, came back up. Once it gets back above the trending dots, once it gets back above this downward trend line like the green arrow shows, and we're getting closer and closer to a buy signal, then we're going to be looking for a higher probability reversal, right? So this is why I posted today. The first dip doesn't mean it's the dip to buy, right? Yes, you could have bought that dip and then a lower high gets put in and then price comes all the way back down again. Possible double wick bottom, right? Possible double bottom over here. We will see. So that's what could play out on Bitcoin. It's a possibility. So this is how we're playing it. And this is how we thought it could possibly play out. We didn't predict that was going to happen. Remember, we had 2 scenarios. One where it would just break down without hitting longer term target 4. And then the first one was price comes up and hits longer term target 4. It did. And then come back down for the next buy the dip. Obviously, we talked about that price could go straight to the moon and hit $100,000, but I didn't think it was likely, right? Obviously, Bitcoin could have dropped down to 0 or $10,000 Bitcoin, and I don't see that happening either, right? So this is what my main thought is. This is what I think is going to be the next possible why the dip opportunity. Please like, comment, and share on this YouTube video. Please like and share the free newsletter. Help me help you with all this free stuff that I'm putting out, the free YouTube, the free newsletter. It helps me as well. So thank you. I appreciate all of you. And we will see you on the next one. I hope you have a good weekend and get off those charts. Get off those charts.